Welcome back. In this video, we're finally tackling Schedule D and Form 8949, the forms that tie together David's investment activity for the year. Investments have their own rules, their own documents, and their own flow into the 1040, and this is the part that intimidates most people. David technically has several types of investment-related income this year, but only two of these will go on Schedule D and Form 8949, the stock gains and the crypto gains. Everything else, interest, dividends, staking, and RSU income, goes on different forms. By the way, David also had RSUs from his employer. RSUs normally show up on your W-2 when they vest, and they only go on Form 8949 and Schedule D if you sell the shares later. David didn't sell any RSUs this year. Today we are only dealing with the items the IRS considers capital gains. And the good news is this is a very clean example, because he has no wash sales. A wash sale happens when you sell a stock at a loss and then buy the same stock again within 30 days. When that happens, the IRS doesn't let you claim that loss this year. They deny the loss for now and add it to the cost basis of the new shares you bought. So you don't lose the deduction forever. You just can't use it until you finally sell the new shares. He has no long-term sales. Long-term means you held something for more than a year. David held everything for 1 year or less, so everything is short-term and taxed at regular income tax rates. He has no capital loss carryovers. Capital loss carryovers are unused losses from prior years. David doesn't have any, so we don't have to apply any special formulas on Schedule D. He didn't trade options, futures, or anything advanced. Those require specialized rules and extra forms like 1256 contracts. David traded only simple stocks and crypto. By the end of this video, you'll understand exactly how everything fits together, what documents you need, and how to correctly report each part on the tax return. Whenever you sell an investment, stocks, ETFs, or crypto, the IRS requires you to report the gain or loss using this flow. It goes broker, 1099B, Form 8949, Schedule D, Form 1040, line 7. Most beginners get confused not by the process, but by the terms. So let's simplify that next. Every sale is either short-term or long-term, based on how long you held it. Short-term is held 1 year or less, taxed at regular rates. Long-term, held over 1 year, taxed at special lower rates. David has 0 long-term sales, so everything today is short-term. Also, don't be confused by the numbers you see in the previous example, this example, and the next example. These are not David's numbers. These examples are just here so you can see the statements you'll get from the brokerage and help better understand the terminology. Alright, this page shows total proceeds, total cost basis, and their difference. David's 8,000 short-term stock gain. Normally, each sale would go on Form 8949, line by line, but Robinhood already reported the cost basis to the IRS, and David has no wash sales, no adjustments, no corrections, and no long-term trades. This allows us to skip Form 8949 for the stock side and summarize everything on Schedule D, line 1A. Before we look at the crypto sale, here's something important to understand. Stockbrokers usually send a consolidated 1099, and inside that packet is the 1099B section, which already shows your cost basis and reports it to the IRS. That's why we can skip Form 8949 for David's stock trades. But crypto platforms usually don't send a 1099B at all. They don't report your cost basis to the IRS, which is why crypto almost always requires Form 8949. Cost basis is just the amount you originally paid for an investment. If you buy something for $700, then your cost basis is $700. Crypto is different. Platforms like Coinbase often do not report cost basis to the IRS, which means Form 8949 is required. These documents show the proceeds, cost basis, dates, and David's $800 gain. Since the IRS does not receive the basis, crypto must be listed on Form 8949 before it can go to Schedule D. Now let's fill out Form 8949. Alright, the part where it says you must check box A, B, C. These letter codes tell the IRS how much information your broker reported and whether the sale is short-term or long-term. David held his crypto less than a year, which makes it short-term, and he did not receive a Form 1099B showing basis. That's why we check box C. How do you know if something is long-term or short-term? Well, if the date sold is at least 1 day after the 1-year anniversary of the date acquired, it's long-term. Otherwise, it's short-term. You can find these dates on your Form 1099-B or inside your consolidated 1099 statement. Since stock basis was already reported to the IRS, we skip Form 8949 for stocks. But for crypto, this row will flow into Schedule D, line 2. So here we see one line represents his Bitcoin sale, which he held for less than a year, so it's a short-term sale. The IRS never received David's cost basis from Coinbase, so this form is where we give the IRS the missing information. And just so you know, Form 8949 isn't just for Bitcoin. In David's case, the only thing missing basis is his crypto sale, so that's the only line we fill out. Now we take everything and move it into Schedule D. But first, here's a reminder. David didn't hold anything for more than a year, so he has 0 long-term transactions. That means Schedule D, Part 2, stays completely blank. Everything he has is short-term, so all of it goes to Part 1. So line 1A is the stock gain, 8,000. Line 3 is the crypto gain from Form 8949 of $800. Add them together for line 7. Total short-term gain is 8,800. That 8,800 then flows directly to Form 1040, line 7. So the biggest lesson today is this: capital gains are simply proceeds minus cost basis equals gain. And no matter what you're selling, the reporting flow is always 1099-B to Form 8949 to Schedule D to Form 1040.